I share that with my room members. We have a lot of people in the room every day with me. I trade from market open to market close. I usually start about 9:15, about 15 minutes before the market opens, and then I will trade right up to market close. And we do a huge amount of education in there, showing charts all the time, calling out trades that I feel are really high probability trade setups. We also have a Discord room where we have 2 other professional traders, Dr. No and Savvy Trader, and another fellow by the name of Jacob, who also post information, educational charts and showing you high probability trade setups. So we'll move forward here. Again, I first have to do the disclaimer, of course. All signals and trading opportunities we provide are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so won't be giving financial advice. And if you have any questions anytime during the webinar, you can go ahead and put your name and phone number or your Skype username in the chat box or in the question box, and Rory, who will be monitoring this, will call you and just call you once and answer any questions that you might have that I can't answer, or if you can't stay. Again, this will be recorded, so you will get a recording of the webinar. And again, we talk about the SPY super system. I'm going to go into the strategies we use, but the key thing we look for here is we have a methodology to track institutional trading money, institutional money. So when we take trades, we know the institutions are in there as well. We don't want to be in trades that don't have institutions in there. All right, and this is just kind of a graphic of the Compass text alert service that I have. We basically send out trade, very highest probability trade setups. And hold on just one second. All right, sorry about that. We had a little, my dog doesn't care for FedEx drivers. That's what that was all about. So again, I'm sorry about that. Again, this is just a graphic of what the text alerts look like when we send them out. We send out trades, the highest probability trade setouts to folks that are members of our alert service, which we have a lot of people on the alert service. But that's what it would look like. It just comes right to your cell phone. All right. I want to tell you just a brief story before I get started. I never do this. Question here, was that an alert? Yeah, that was an alert, all right. That was my dog alerting me. Do I trade ES and NQ futures in the trade room? I typically don't trade ES and NQ, but the system, the methodology we use works fine on it. I mean, it's exactly the same thing. I do trade the SPY sometimes and the Q sometimes, but I mean, obviously you can trade ES and NQ. And the system works exactly the same for that as it does for anything else. I do want to just kind of tell you a quick story. I always get people asking me, and I never go back over this about my history and how I get into trading. People ask me that all the time. I don't really, talk about that myself that much. So, but I will tell you how it's an interesting story. That's why I want to share it. Basically, about 14 years ago, I was working in IT. Had been working in IT for a long time. I was working for a company that was doing cloud computing. They actually had multiple, probably 30 servers, and I was working in IT on that. I have a Microsoft certified systems engineer degree, but in any case, I was working in IT, and in December, about 2 weeks before Christmas, my boss, who I was very good friends with, told me that they were going to have to lay off me and a bunch of other people because they had ran into some cash problems. Listen, I've been trading already part-time, and I've been investing in trading part-time, trying to learn options. So I figured this was a good opportunity to take advantage of that. So I wasn't too upset. I mean, didn't have a job, but so I started to trade. And it's really the interesting thing is I started trading, and it worked very well. I traded through the end of December. Market wasn't that great, and then I traded in January, and about halfway through February, my boss called me and said, things had returned to normal, things were okay again, and he was ready to have me come back. He said, "You can come on back and start on Monday." And I said, "I appreciate that, but I can't afford to go back to work for you anymore." I had been doing too well trading, and that's how I get into full-time trading. I didn't really make a conscious effort to do it, conscious decision. I was pushed into it and did it at that point in time, and it worked out really well for me. But anyway, I just wanted to try to share that story with you. That's how I get into trading 14 years ago, full-time. All right, so let's talk about the market and what drives the market. And it's very important as retail traders. We're all retail traders. We're represented by these little bitty marbles here. So we're all retail traders. We as retail traders, we cannot move the market. We may think we can move the market, but we can't move the market. So when retail traders are trading a stock or an index or whatever, if it's mostly retail traders that are doing it, it's going to be chop, it's going to be chaos. You're not going to get any kind of smooth trend that you can follow. So when retailers are in there, we don't really want to be in the trade. Now the big marble here, this is the institutions. Institutions, Goldman Sachs, Morgan Stanley, JP Morgan, HSBC, big banks, all the big banks, investment banks, also hedge funds, hundreds and probably thousands of hedge funds, which have billions of dollars to invest. Those are institutional traders. Mutual funds, Vanguard, T. Rowe Price, all these big, huge mutual funds, billions of dollars to invest. Pension funds, huge pension funds, state pension funds, police pension funds, firemen pension funds. They have massive amounts of money that they can put to work in the market. So that's what the institutions are. And our job as retail traders is to try to make a determination of when the institutions are in the trade and when they're not, and be in the trade when they are and not be in the trade when they're not, because we're not going to beat institutions. We take our money from other retail traders like ourselves, and we do this by having more information than they've got, and better information than they've got. And I mean, let's be brutally honest, it's a zero-sum game here. If we're taking money from somebody, they're losing and we're winning, and that's just the way it is. And if you're going into a battle, which is what trading is, you want to go in with the best tools. And what we've got here is the best tools and the best strategies I believe that you can get. Okay, so let's move ahead here, and there's just a couple of things I want to show you as we get started here. This is the SPY. This is a daily chart right here on the SPY, and this is a piece of software I use called TC2000. This is this chart what I use for charting and deep dive technical analysis. I use the Thinkorswim for my compass system, which I'll show you in a minute. But I just kind of wanted to show you the SPY. This was up through about a week ago. These are standard candles. You see, this is the standard candles on the SPY. And this is the SPY with Heiken candles. And you can see the difference in the choppiness and how Heiken candles smooth everything out. And we're going to get into a lot of details about how you identify when a trend is beginning and when a trend is ending by using Heiken candles. Somebody says they're not able to hear. Hopefully everybody can hear me. If you can hear me, please type a yes, so I'll know that. Yeah, okay, good. Yeah, everything's good. If anybody who can't hear me, obviously there must be something with this software there. All right, so what we do in the room, and the room also extends to the alert service because we're taking the same kind of trades there. We have basically two rules to trade by here. What we do is we want to trade the best and skip the rest, which means we got to spend a lot of time finding the best, highest probability trade setups that the institutions are in and trade those. That's what we do. Some days there may be one or two, some day there may be none, some day there may be five. You just don't know. And our other rule here, and this kind of shocks some people sometimes because I repeat this in the room quite often. Our objective as traders is not to make trades. It sounds kind of productive, but our objective is to make money. We make money by making trades, but only specific trades. We don't want to just make trades. And the reason I say this is because a lot of traders when they're sitting at their computer and trying to trade, they feel like they got to be in a trade all the time. They feel like, you know, I'm a trader, I got to get into a trade. So they'll start taking trades that are borderline as far as being good trades are concerned, or they'll suffer from FOMO, from fear of missing out. They'll see a stock taking off to the upside or taking off to the downside, and they'll chase into it without taking any kind of consideration of whether it's actually institutions driving that, whether it's just retail traders, whether it's going to reverse and go back again, and whether you should take the trade at a support and resistance level as opposed to just chasing it. So those are the two main rules we live by here. Now, and obviously profitable traders, as retail traders, we need an edge, and we have an edge. Our edges, we have basically 4 edges, but the main one is we use the right line compass system, which I'm going to show you, which is able to identify when the institutions are in the trade and when they're not in a trade, to a very high percentage, in the upper 90s. If it tells us that the institutions are in there, it's in the 95, 96, 97% likelihood that they are. We also trade relative strength and relative weakness. This is not RSI. This is relative strength to the SPY or to the QQQ. Is the stock outperforming the SPY, or is it underperforming the SPY? And this is really important, because if you take a stock that's got relative strength, for example, and you're moving up and the market turns around and reverses back down again, a stock with relative strength is not going to reverse and go back down as fast. So your losses are going to be mitigated. The stock is going to may continue to move up or start to move sideways when the market comes down. So that gives you an opportunity to get out or take a small profit, even if the market reverses on you. Now, the critical thing is we trade with the market trend. This is the most important thing. Some days there's no trend in the market, so you don't have a market trend to follow. But it's very important, if there is a market trend, if you've got a trending day, that you want to trade in that direction, because you've got the wind at your back when you're trading like that. And the fourth thing here is buy at support or near support, sell at or near resistance. Really important, so that you're not chasing stocks. You're looking for the very best entries. Stocks they don't go up in one direction or down in one direction. They'll go up and breathe and come back down and then go back up again. You're looking to get in when they come down to a support level and then reverse and head back up again. All right, so those are our edges. And the compass system, I just want to introduce to you briefly, if you not know what it is. It identifies the highest probability trade setups while sidestepping setups that look good but will fail more often than succeed. This is what the compass system does for us. This does this by identifying when the institutions are driving in the move and when they're not. And we can identify this information, and I'll show you how we do that. The compass system analyzes complex trading data, and displays the results in an easily identifiable visual format. And this is really important, because a lot of the information here is very complex, but the way it's displayed on the charts is very easy for even a novice trader to understand. And that's really important. You don't have to be a technical and analyst genius to be able to find good trades. So again, this is how we get our edge over retail traders. This is kind of redundant, but we only take trades being driven by institutions. We trade stocks that have relative strength or weakness versus the SPYs or the Qs, and we trade in the direction of the overall market trend. So that gives us an edge. Again, how does it give us an edge? Our trades will be supported by institutional buying and selling. The stock will be outperforming the index, and stocks that are moving in the direction of the overall market. That's our edge over retail traders. All right. So this is a little funnel that I put together for how to find the basic high probability trade setup funnels. And what you do is, if you're looking at a stock, it needs to meet all of these criteria. If it pops out the bottom, then it's a high probability trade setup. The daily and 5-minute chart need to be aligned. If you have a daily chart, a 5-minute chart that's bullish, the daily chart needs to be bullish as well. You don't want to be trading a 5-minute chart that's bullish when you have a daily chart that's bearish, because you have no staying power. You can't stay overnight. So any trade that we take, these are going to be aligned, which means if necessary, I can take them overnight, and I can also swing trade them. So that gives me a lot more flexibility in the trade. So I don't have to be hawking the stock all day long, trying to decide whether I'm going to get in or get out. Again, trade with the trend, both stock and market. So if the stock is bullish and the market's bullish, we've got them both going in the same direction, and vice versa on bearish stocks. The compass indicators need to align. I'll show you how we do that. The compass indicators all need to be aligned up to show us that the institutions are in the trade or they're not in the trade. That's really important. We want the compass indicators to tell us if we're going long a stock, we want to know that the institutions are going long the stock too. And then we also trade relative strength and relative weakness, as I mentioned. This is really important. If we have 5 or 6 stocks that we like, we're going to take the one that's got the strongest strength to the market. And enter near support or resistance. This is the final thing. The stock meets all these criteria, then you want to get into the trade when it's near support or near resistance. Stock moves up, for example, pulls back to a support level, reverses and heads back up again. That's where you want to get in. You're getting in at a good level. You're getting in with a lot less likelihood of any kind of a big drawdown. So again, this is the funnel method for highest probability trades that I just talked about. First thing you have to do is you have to identify the market trend for the day, if there is one, and trade in that direction. Obviously, market bullish trending, you want to only trade long. If it's bearish trending, you want to trade short. If it's chopping, then you have to rely on the stocks. Again, the stock to be traded should have daily and 5-minute charts aligned. The compass indicators must align in the direction of the trade. And these are 2 critical ones. Stock should have relative strength and relative weakness to the SPY. It also should be above the VWAP on a 5-minute chart, by the way, and I'll go into that. The volume weighted average price, it's a very critical support and resistance level that the institutions use all the time. If the stock price is above the VWAP for long and below the VWAP for short, you should never be trading a stock long if it's below the VWAP. And again, enter trade near confirmed support for long and resistance for short. And you also need to look and make sure there is no nearby support or resistance on the daily chart to limit your profit targets. In other words, your risk reward, it needs to be worth taking the trade. You've got to have enough room to the next resistance level for a long or to the next support level for a short to make that trade work. And the key thing here that we go over in the room every single day is have patience. This is the hardest thing for most traders to be able to accomplish, which is to be able to sit on their hands on choppy days or bad days and just have patience and wait for the trades to come to you, or wait for a high probability trade to set up. Some days it's really hard to find them, and if you can't find them, don't trade. All right, so this is the a recap of the strategies I use in the trading room and the alert service. This is what I trade options all the time. You don't have to trade options if you find a high probability trade setup. Nothing says you can't buy the stock or short the stock. That's fine. But I use options to get leverage out of that. But we do straight calls and puts. Obviously, this is a key component. We use debit spreads using weekly options expiration. I have a whole video on this and why this is a much better strategy than going out in time to do debit spreads. I do what's called time spreads over earnings. It's a calendar spread, and this is meant to capture the volatility crush. When earnings comes out, before earnings comes out, the premiums and the options are all jacked up high because the market makers don't know which way the stock's going to go and how much it's going to go. So they move the price of the options way up, and that's called volatility. And when the option comes out, when the earnings come out, that premium drains out of those options. And the way we structure this is we take advantage of that volatility crush by taking it and making some money on that. We just did one on Thursday on WDC, I think it was on WDC, that moved nicely. We made, I think, we get in for about 35 cents, and we closed it out at anywhere between 54 and 84 cents the next morning. So $34 returned $54 to $84, pretty nice. I also have a weekly ATM strategy. This is a method of selling premium week after week against a longer term put that gives us protection. It's kind of a strategy that it's a spread, but the long put is way out in time, and the short puts are sold every week to bring premium in. And we also do credit spreads to capture premium every few weeks. Over a few weeks, we do quite a few credit spreads when the market is conducive to that. And we also have a thing called the SPY super system for very high probability trades to catch SPY moves. So somebody asked if we trade the Qs or the ES or the NQ. You can do that. You can trade on these SPY super system setups. You can trade the NQ or the ES as well. All right, and let's talk. I do want to introduce the alert service and just let you know who it's for. Obviously, the Compass Options Alert Service is designed for day traders and short-term swing trades. It's not an investment service. This is for trades that are going to last during that day, or maybe 2 days to sometimes as long as 2 weeks, but generally only a few days. Again, it's designed for traders who can't or don't want to watch the market all day. You're going to get real-time alerts on the highest probability trade setups. When we find the very highest probability trade setups that are going to last long enough to justify an alert. I mean, if I see a trade and it's only going to last 20 minutes, I'm not going to alert on it because it's not fair to the alert service to send something out that fast. They don't have time to get in and to react to it. So, but they will be on only the highest probability trade setups. And how do we identify the highest probability trade setups? Well, we went through the funnel. We identify institutional involvement. The institutions have to be in them, and we want the market internals, which is what's the market doing, moving up or moving down? Is it significant? And then also I do some deep diving technical analysis to find the very best trades. All right, this is just a cumulative PL. This is, I think, from August or something for what we did for 90 days. It was pretty good, about 30-something thousand. And this, I just kind of recap this. I threw this in here just as an example. This is, we had a pretty good run here from March through June. I think in this particular, this case we had about $30,000 in profits in these 4 months. But I've put it up here to just kind of show you the win rate. This is typically what you're going to expect for the win rates on the trades that we take. Somewhere usually between about 85 and as high as 90 sometimes. I think September we actually had 92%, and sometimes it'll slip down to 80, but that's generally what our win rate is. And you can see the number of trades we take varies. It's going to depend on what the market's giving us, and that's really critical. I get a lot of people asking me, well, how many trades are you going to be alerted? I don't have any idea. Sometimes there'll be 2 in a day or 3 in a day. Some days there'll be none for 2 or 3 days. It just depends. I think that we're in it just to make money. I'm not going to send out a trade just to send out a trade. So this is just kind of a recap of the September trade review. And I want you to see what kind of percentage returns we get on the trades that we take. Because listen, I know you get a lot of emails about these services that are promising 100, 200, 300, 400, 1,000% on the trade. And like you can do that consistently. You can't. It's nonsense. You can't do that. The whole point here is to basically grind out 15, 20, 25, 30% trade after trade after trade after trade and have a high win rate. That's what gets you consistent money. If you're trading for those 1,000% gains, you're going to have 10, 12, 20 losses before you get one winner a lot of times. It's just not sustainable. And for your trading mentality, it's terrible. All right, so these are the September trades we had. I've just got them identified by what they are. Doesn't really matter that much. This is a percentage: 23%, 43%. Square, we only had 5%. We did have a nice trade in STX, 108%. That's one of the bigger ones. But again, you can see 15, 20, 25, 30%. This is normal. And we have losses. This is something I want to make sure everybody knows. Not every trade is going to be a winner. In September, we had 25 wins, 2 losses. This was a 92% win rate. Now, just to give you an idea of the profitability, what I do is I take the trades that we take, and I assume that an investment of $2,000 in each trade. That's not what everybody does. And I don't even put the same amount into each trade because it depends on the market. But I need to have some sort of a benchmark to show you what profitability we're getting. So in September, if you had invested $2,000 in each trade, it created a profit of $7,788. And it was actually a very difficult market to trade in September. We were lucky to find 27 trades, to tell you the truth. All right, so this was October. Again, you can see we had 24 wins and 4 losses here. 86% win rate, and profits at 44.80. And a lot of the profits are obviously going to depend on how long we can stay in the trade. What's the market doing for us? What kind of trending day are we having in the market, or what kind of choppy day are we having in the market? That has a big impact on what your profits are going to be. But again, you can see the percentages: 32, 20, 14, 6, 23, 33. This is standard. This is a standard return that you're going to get on these kind of things. And again, we had some losses, as you can see. And you know, this sedge, we actually had a news event come out against us, and that's a solar stock that knocked it down. So, but generally speaking, this was a nice one, JD 61%. But you can see what we got here. All right, and these were the November trades. Just to recap again, you can see the percentages: 21 wins, 4 losses, 84% win rate, 51.60. So the win rate was a little lower, but the profit was a little higher. Again, it just depends on how long we can stay in the trade. And you can see we had some different strategies in here, but that was the November. And here was December. Very few trades in December. A lot of holidays, slow trading. Couldn't take a lot of trades. 14 wins, 2 losses for 87.5% win rate. And again, netted 31.15. Oxy was a loss. This was that's an oil stock, of course, and if you get any bad news or good news, it depends on what direction you're trading it in. And we had some news events that knocked that down, but that happens. Not much you can do about that. So those are December, and these are January trades so far. So far, we haven't closed a lot. We've got 14 wins and no losses so far, but I mean, we've got a couple of trades that are underwater right now, so I don't know what the final results will be for the month. But you can see we did have a nice Boeing here, about 96% the other day. But Vertex 32, Vertex 37. We traded Vertex a couple of times, and credit spreads here, debit spreads here. So you can see the differences we're getting here. That was a time spread in WDC. That's what I mentioned to you. You have 39%, so that was pretty nice. All right, so that was we're up 85.40 this month so far. We'll see what happens. Like I said, we have a couple of trades that are underwater right now that may modify that. All right, and these are just some of the trades that went out recently on alerts. That was crowd right here. This was an overnight trade, and I just want you to see some of these are day trades, some of these are overnight trades, some of them last a day, some of them last a week. But these are some of the specific ones we did. This was an overnight trade on crowd in at 6.90, out at $8 the next morning. This was a big one. This was the STX, so we 108% profit. We get in at 370. We got some. We were short the stock. They downgraded their guidance. The stock fell down, and so we had a big profit in that. But that kind of news gave us a little bit of a help there. And Amazon in 2 hours, 32% profit. So you can see that these are the trades that went out on alerts, and you can see the profits rate: 32, 16, 50, all over the place, 45%, but still nice returns. And these are even more recent ones. This was Workday we just did recently. Meta a couple of times, 24% on the first one. Not sure. Oh, this was a debit spread, and so 40-cent profit on that. That's actually a put credit spread, that should say. We collected a 50-cent credit and we closed for a dime, so we had a 40-cent profit out of the max of 50. That was pretty nice. So this is what the alerts will look like when they come out to you, and these are the results that we're getting, and you can see that the percentages obviously are the same as the ones we just showed you. All right, so this is just going to recap. Again, I'm going to get through the recap here, and then I'm going to get into Heiken candles, and we're going to spend some time on Heiken candles. 2023 trade results using $2,000 a trade. If you invested $2,000 in each trade, take us in the Compass Options trading room. It produced a profit of $60,208. Pretty specific. Obviously, nobody's going to hit that exactly, but that was what the results are based on $2,000 a trade. If you had an account size of $50,000, each trade would have used, if $2,000, it would have used 4% of your account balance, and the percent used would be lower as the account grew. It produced 120% return over the year. 50,000 balance grew into 110,000 at the end of the year. And at the end of the year, if you were still putting 2,000 per trade, that was only 2% of your balance at that point in time. So that just kind of gives you an overall view of if you had taken all the trades last year, what you would have done. And just to cover the alert service, we trade the best, skip the rest. When you get an alert, it's going to have obviously the stock symbol. It's going to have the option strike price. It's going to have the option expiration date, and it's going to have the price to pay for the option. Now, usually I send out one to buy and then another one to close it. Sometimes you'll get I'll put the close price right on the original alert, but most of the time I'm going to send out another one because I like to watch the price action and see what the stock price is doing and try to get as much profit out of it as I can. And if you get an alert that tells you to close a trade with a price, the option may not be there yet, but what you're going to do is set it as GTC or good till canceled, because if you're not going to be available in the morning or be able to watch the market in the morning, you want that trade working when the market opens. So you just set it up as good till canceled. They're either going to be set up as day trades or good till canceled. Put it in as GTC, then you can adjust it later if you need to. All right, and I guess I do want to go into how we retrieve these stunning results that we just had. I'll show you how we do it. Again, we were able to identify when institutions are driving a trade and when the market internals are in our favor. So we only take trades where both of these are in our favor, allowing us to align the trades with the institutions. That's how we find the best and skip the rest. And we do this by using the compass system. I'll skip this as institutional. This just goes over why institutional following institutional money is so important. So the compass system is the system we use to find institutional traders or when the institutions are in a trade. And we do what's called the triple screen assessment. This is a fancy way of saying multiple time frames. We watch multiple time frames on momentum, trend, and money flow. So for us to think that institution's in there, I'll be fairly sure an institution is in there, we need to have momentum going in the same direction across the current time frame and multiple time frames, the trend going in the same direction on current time frame, multiple time frames, and money flow going the same way on current time frame and multiple time frames. When all three of these are lined up across multiple time frames going in the same directions, it's a very, very high probability that that institutions are in there. All right, then the compass system is what we use to do that. So before I get into that, I want to get a little bit into Heiken candles. So this is a chart of Heiken candles. This is Tesla on my compass system. This is the compass system. This is think or swim. These are the indicators that we look for. This is current time frame momentum, multi-time frame momentum. But the key here is these candles right here are Heiken candles. And the way Heiken candles work, and we'll get into this, was if you get a wick and a tail followed by a flat bottom candle, that's called a Heiken reversal to the bullish side. And we're going to show you a lot of these. And you see what happened. As long as you got flat bottom candles that are Heiken, you can just stay in this trend all the way up until you start getting the wicks and tails starting to come back in again. So this is Tesla, and this was a Heiken setup, which is how we identified this. This is on a 5-minute chart. So this was during intraday trading. So what are the Heiken candles? What's the advantages over standard candlesticks? All right, well, there's several of them. It identifies confirmation of a trend reversal. This is the biggest one I use to actually find a stock that's hit support and starting to bounce back up again. If you're on a regular candlestick, you kind of have to watch for a couple of candles to make sure it bounces off there and then confirms. If you're using Heiken candles, as soon as you get a bounce off of support and you get a flat bottom candle, then you've got a Heiken reversal to the bullish side. If you have a flat top candle, you have a Heiken reversal to the bearish side. It allows trade entries on a confirmed reversal, avoiding failed breakouts. This goes hand in hand with this. If you've ever tried to trade a breakout and you use regular candles and you jump in on that first candle going through the breakout, and then it turns around and it heads back down on you, that's called a failed breakout, and it traps you in there. You know, what you do when you want to get into these trades when it's confirmed, and if you use a Heiken candle, you'll have a confirmation because a Heiken candle is created by 2 candles. So we'll show you that. I'll show you that. It smooths out the price movement to eliminate noise, as you can see right here. No choppiness. It's very, very easy to see. Very easy, much easier for you to trade. You're not going to get so nervous about a trade. It allows traders to stay in a trend longer, avoiding shakeouts because the noise is going to be eliminated. identifies waning trend momentum to exit for profits. Right here, waning trend momentum. Right there with this flat bottom, top wick and a tail. And it also makes it much easier to visualize the current trend. It takes a lot of the chop and everything out of there. I'm going to cover a bunch of these. All right, so I just want to go over this a little bit. This is, if you haven't used Heiken Ashi candles before in your technical analysis, you may want to try using them. Heiken Ashi means average bar in Japanese. It does smooth out the price action. It's created by two candles. It takes two candles to create a Heiken Ashi candle. And that's really important because that's what takes all the noise out of this. Bullish Heiken Ashi candles have flat bottoms, and bearish Heiken Ashi candles have flat tops. The wicks and the tails don't matter on these. If you have a bullish candle with a flat bottom on it and it has a big long wick, a lot of times you would look at a regular candle and see a big wick and think that that's a bearish sign because sellers are coming in and driving it down. That's not the case on Heiken Ashi candles. Heiken Ashi candles that are bullish, that have a flat bottom and a big wick on the top, are more bullish than ones with small wicks. And again, the bullish trends will have flat bottoms, Heiken Ashi candles one after another, and bearish trends will have flat top Heiken Ashi candles one after another. All right. So you get flat bottom candles for bullish, flat top candles for bearish. And generally, you can stay with a bullish trend as long as no flat top Heiken Ashi candles appear, indicating a lull or reversal in the trend. And we'll look at the charts so you can see what they look like. Again, reversals in bullish trends are going to have flat bottom Heiken Ashi candles, followed by a smaller doji candle, followed by a flat top bearish Heiken Ashi candle. So you get a flat bottom, couple of dojis, flat top. That's a reversal. Okay, I won't go into every single detail on this. You can read this if you want, but there is one thing here. If a trend is ending and you've had a lot of long Heiken Ashi candles, the candles have been large. For the reversal to actually be confirmed, you don't want it to be reversed by small, tiny little candles. You need to have if you got a bullish trend, for that bullish trend to reverse to the downside, and you've had big green candles on the upside, you want big red candles to the downside. That's really important. And a thing to be aware of is the stock, the price on the stock on an HA chart is not going to reflect the actual current price of what the stock price is, because the Heiken Ashi candles are calculated. So you want it by two candles. So you want to be sure to refer to your normal candlestick chart to see what the price is, or just look at your platform. It'll tell you. All right, so there are other nuances, but we're going to look at some so we can show you how to use them. And yeah, I've had about a 97% win rate with Heiken Ashi candles, and you should use candle closes. In other words, you should wait till a Heiken Ashi candle closes before you make the determination of whether the reversal has occurred or not. And this was just talking about the height needs to be long. If you got a lot of long candles going up for the reversal, you need a long candle coming down. Little candles are not gonna do it. Okay. And we talked about this, the stock should be on stocks with relative strength. This is basically a criteria of using Heiken Ashi to make trades by using the normal high probability criteria that we have and introducing Heiken Ashi candles as part of this. All right, this is a graphic chart of Heiken Ashi candles, and I want you to see a couple things here. This is obviously bearish; you can see it coming down, but you notice that each Heiken Ashi candle starts in the middle of the previous candle. They always start in the middle of the previous candle. Now here we have a Heiken Ashi bearish candle, flat top, and then we get a wick and a tail, and then another flat top. So this is basically a confirmation of the downtrend that is going to continue to the downtrend. This isn't a reversal. It's basically a confirmation of a continuation. And you can see we keep getting flat bottoms, flat tops all the way down. This is a bearish trend. Now we get wick and a tail here, and then a wick and a tail here with a green candle, and another wick and a tail with a green candle, and another tail. Then we get a flat bottom green candle right here that's large. You see that? With a flat bottom, That is a Heiken Ashi reversal right there. If you were looking at your chart and you saw this you would identify as a Heiken Ashi reversal, and you notice flat bottom, flat bottom, flat bottom, flat bottom, a nice Heiken Ashi trend. All right, so this is kind of the graphic setup of what you're looking for with the candles. All right, so this is Tesla using a Heiken Ashi reversal that we just showed. I'm showing this on the compass system. All right, so there's the Heiken Ashi reversal right there, flat bottom after a wick and a tail, and a beautiful trend to the upside. This was Gilead. This was a bullish Heiken Ashi reversal on the daily chart. This is a daily chart. You're getting a wick and a tail followed by a flat bottom. We've had other Heiken Ashi reversals in here. Well, here's another one right here. But this is one that I identified. And again, notice it's a bullish Heiken Ashi reversal, and notice the institutions. This is green across the board. Green and blue on the compass system is bullish. Red and yellow is bearish. This is all green. It's very bullish. This was GE. This is just one we just took the other day. We're looking for a bullish Heiken Ashi reversal. See the wick and the tail here? See the flat bottom? Flat bottom. That's GE with a Heiken Ashi reversal to the bullish side. Everything's green except for this. This is a long-term trend. This is still a little bit choppy, but everything else is green, which is plenty, as far as I'm concerned, is plenty of bullishness that the institutions are in this trade. So that's GE. All right, so I'm gonna drop the slides here, and I'm gonna go to some live charts, and I'm gonna take a look at these on TC2000, because it's a little bit easy to see the candles on TC2000. And this is one here. This is as of Friday, so this is a current chart of Ross Stores, and this is Heiken Ashi. This is a Heiken Ashi candle setup right here. Now, one of the things is this is one of the stocks I'm going to be looking at for Monday. But if we look back at Heiken Ashi candles, you see the tail here, and then you see the flat bottom, big green candle. This is actually green. I color code my candles in TC2000 based on whether their Bollinger Bands are expanding. If the Bollinger Bands are expanding, I color them blue, and that tells me that it's coming out of compression. So it gives you a little bit more strength. But you can see the big move here, and you see how smooth this move is up, and then it starts to wane here as the stock moves sideways, and then another Heiken Ashi reversal, and then little candles to the upside. Now this white line is the 8 exponential moving average that I've used to follow a trend. But we look over at Ross Stores right now. We had a Heiken Ashi reversal right here, and we've been marching up, marching up, marching up. This is a beautiful long setup on Ross Stores. And if I go back to the regular candles, this is the regular candles on Ross Stores, and you can see what that looks like. All right, and this is one, if you're interested, you can jot it down for Monday as a potential trade. All right, so I'm going to look at some more candles, some more charts quickly to show you Heiken Ashi candles. This is Intel off of earnings. That's a big Heiken Ashi reversal to the downside. Now, Heiken Ashi candles, one thing you notice, see the gap? No gap on Heiken Ashi candles. So you're not going to see gaps, but it does tell you have a Heiken Ashi reversal on Intel. And you notice you had one here, and you had a bullish one here. It just depends on which way you're going to trade the stock. Intel, before the earnings, you certainly wouldn't be trading it. You wouldn't be trading the short, but now you'll be considering it short if you get confirmation the next day. All right, so I'll just pop through some charts on here to help you visualize what this looks like. This is ON. That's a regular chart on ON. Looks kind of bearish. And we switch over to Heiken Ashi, and you notice it is. See, we got right here a wick, and we've got a little tiny wick on here, and now a flat top candle here. ON is a bearish Heiken Ashi reversal to the downside. And let's see, I got a few that I want to show you, and I hope this helps you visualize it. This is LSCC, Heiken Ashi reversal to the downside here. Here's the regular chart, gap down, gap. This red line is the 50-day moving average that I use. This is 100. It's gapping down. If this opens red on Monday, I'm going to have a Heiken Ashi reversal confirmation to the downside. So LSCC. So, all right. Same thing here. Heiken Ashi reversal. See the little wick? Flat pop. Heiken Ashi reversal to the downside. Bearish. Obviously a bearish stock here. Likely reported earnings, and because you can see this is the volume bars, and these are pretty big. All right, let's see what else we got here. This is one that I like, short, AEHR. This is, and I wanted to just show this, and this is where the trend actually turned bearish right here. And it broke down below the 8, and you see the flat top, and then see the flat tops, and see how it just keeps coming down, coming down, coming down. That's a pretty nice trade. And a lot of times when you get a Heiken Ashi reversal, you'll get multiples in a row. It'll keep on coming down. So this is kept on dropping, and this was a really nice Heiken Ashi setup here to the downside. If you get in right here, 27.63, get down to $16.10 right now. A really nice real setup. And if we look at the regular chart, here's the regular chart right here. And so it was bearish, but this is much easier to see, this bearish reversal right here. Let's see, PODD. This is another nice Heiken Ashi reversal to the downside. Medical devices. All right, so this is the Heiken Ashi reversal. You see the flat top here. See, we had a flat top here, and see that little trend as it comes down. And it tells you get out right here. You reversing back again. And here is the regular chart on this. See how it's breaking down below the 50-day moving average with the Heiken Ashi reversal to the downside. Here would be your target right down here around 176. Right on pod, and I think I actually have a 5-minute chart on pod too. Yeah, this is the 5-minute chart, and this is the open the other morning. You can see the Heiken Ashi reversal. Let me switch to Heiken Ashi 5-minute. Oops, go back here. Okay, so this was Friday. You can see the Heiken Ashi reversal here, and then we had a Heiken Ashi reversal to the upside, Heiken Ashi reversal to the downside, another Heiken Ashi reversal to the downside, and it ended down for the day. But that's a nice little run on that. Now I'm much more interested in looking at on the daily Heiken Ashi, because this is what I'd be interested in as far as it breaking down right here. But this is a daily Heiken Ashi reversal on PODD. Okay, let's take a look at some bullish setups. Here's Amazon Heiken Ashi on Amazon to the daily on the daily chart. You can see the Heiken Ashi reversal here. You see the tail and the flat bottom right there. There's the flat bottom. It's breaking up. If I switch over to a regular chart, whoops, let's go to the daily. There's a daily in Amazon. See, it's trying to break out of this resistance level I've got right here, and it's trending up. It has earnings 2-1, by the way. It's very important to be out of these things before earnings occur. So, but I just want to show you the Heiken Ashi setup on Amazon. Beautiful right there. This was another reversal right here, you notice. Came down here and moved up nicely. Now, let's see what else I got. I got NU. These aren't necessarily stocks I want to trade. I just want to show you how these Heiken Ashi candles work. This is on NU. See this beautiful Heiken Ashi reversal right here to the upside, and see 1, 2, 3, 4, 5, 6, 7 Heiken Ashi candles that you're in on this thing. This is from the 5th of January to the 16th of January. Nice uptrend on NU. Not one I usually trade, but I just want you to see how good using Heiken Ashi can be for you. CSX as well. And let's Heiken Ashi CSX. Wick and a tail, flat bottom. This is nothing I'm going to trade. You see how choppy this stock is, but I do want you to see the Heiken Ashi reversal on CSX. And this is kind of a bullish breakout right here at CSX. This is one that's really, really nice. It has earnings this week. This is Merck. This is a regular chart on Merck. You see how bullish this has been. Look at how nice the Heiken Ashi reversal was right here. This is where it reversed. This is where it broke above the 200-day moving average. Beautiful upside move, and really no particular reason to get out. You had one bearish Heiken Ashi here, but it's very small. And that right here we had a bullish Heiken Ashi reversal on Friday again. Earnings on 2-1, however, so not a lot of time left on that. What's the question here? How long do they last? So on the daily, each one is scale is a day. Yeah, on the daily, if we're looking at the daily on Merck, this is the daily chart. Each one of these is a day. Okay, it's 1228, 1229, but they're constructed of 2 daily candles. That's how the Heiken Ashi candles get. But this, as again, this run here went from 1228 to, if you followed it up to, you still got your first wick and tail. This was 110. So that's a nice little run on that. Here it is, 1228 to 110. All right, let's see. You got a couple more I want you to look at. Walmart. Walmart. This is a regular chart on Walmart. This is a gap. I highlight my gaps. This is a gap fill. It's been pretty choppy, but let's take a look at the Heiken Ashi and you see what happened here on Friday. Heiken Ashi reversal to the upside. We had one right here. It moved up nicely. Then we kind of chop around, and now we've got a Heiken Ashi reversal to the upside. But notice no bearish Heiken Ashi reversals. No flat top red candles here anywhere on Walmart. CTLT. This is another drug. This is a drug manufacturer. Nice Heiken Ashi reversal right here, and we had one right here. This was a pretty nice move. Then it kind of, this is what stocks do. They breathe. They move up and they breathe. But this one breathed, and now we got a Heiken Ashi reversal to the upside. Earnings on 2.6, so we got a little bit of time on it. Look at the regular stock chart. Here, this is a nice little gap up. This is a pretty nice little move. This is a line called an algo resistance line that I draw in the charts. This is what institutions actually use for the algos use them sometimes. And I identify those. That gives me a break above the algo line. That's bullish. The volume was bullish, and the Heiken Ashi looks really nice. Oops, my TC2000 just locked up. There we go. Here's the Heiken Ashi reversal on CTLT. And I do want to look at ABNB as well. ABNB, we had Heiken Ashi reversal Friday on ABNB, and it's basically confirming the trend. You had a Heiken Ashi reversal here, and then a couple of wicks and tails, and now a Heiken Ashi reversal to the upside. Really strong move in ABNB on Friday. And if we switch to Heiken Ashis on 5 minutes, you're going to see, especially if I go back and change this to not including the post market, you can see the moves on ABNB during the day. If you wanted to intraday trade off of this, see this nice Heiken Ashi reversal here, 5 or 6 nice candles, another one here. This was a bearish one. You wouldn't be trading ABNB short, but you'd be looking to go long right here on this Heiken Ashi reversal. See the wick and the tail, flat bottom. This yellow line here is the VWAP. It's bouncing off the VWAP. Perfect place to take a long on ABNB right here. And then you get a couple channels and you get out. And that was like 2:30 in the afternoon. That's a pretty nice run right there. That's from 145.43 to about 150. That's $5 gain inside of about an hour. All right. And let's see. I want to look at a couple more, and then we're gonna switch to some regular charts. This is Pfizer. This is on a daily chart here. Yeah, I want to do a daily chart. Pfizer breaking down. See this breakdown? Flat top, flat top. Pfizer breaking down. Decent short setup. Earnings 130, however, so I can't really trade it, but it's a nice setup on that. And you can see here's the actual chart. See how it's trying to break down below there. That's what I'd look for, a break below Friday's low. This Heiken Ashi candle there. And let's see, XPEV, just kind of want to show you some that have done work really nicely recently. Is XPEV to the short side. Purple line, 200-day moving average. Heiken Ashi reversal below the 200-day moving average, below the 8 exponential moving average. Boom, right down. Beautiful trade in XPEV. Here's what it looks like here. And here's the Heiken Ashi candles that identified that. So once you get the Heiken Ashi reversal, it looks pretty nice. Cisco is also a nice one. Heiken Ashi reversal right here, marched right up, right through the moving averages. And I'll do one more. XLC, we'll take a look at the index. And this is communication services. Beautiful, beautiful trade to the upside here in XLC. Again, here's your regular candlesticks. See it marching up. See right here is where it reversed, right there on 118. I look at Heiken Ashi. I look at them right here on 118. There's my Heiken Ashi reversal. See the flat bottom. flat bottom, flat bottom, flat bottom, all the way up. Candle's turning blue as far as I'm concerned. That's a bullish because it's the Bollinger Bands are expanding. It's coming out of compression. So there you have it right there. So that's XLC. So those are the Heiken Ashi candles, and how I use them in trading. Basically, I'll look for the stock to move to a support or resistance level if I'm trading on the 5-minute chart, and then I'll just wait for a Heiken Ashi flat bottom candle to give me a Heiken Ashi reversal to the upside, and that's where I'll take the trade. All right. So let me get back to the presentation here. Bear with me here just a second. And I'm gonna have to move this back. All right, so we'll zip through these. Sorry about that, but I did want you to see some real trades that are on real time. So, and okay, so here we go. Boom, boom. All right, so these are some of the recent trades we've taken using the Compass system in the room and on the alerts. Workday, I think that was one I showed you that I alerted on. Now this is a daily chart on Workday right here, and this is where we took the trade. You see this is with Heiken Ashi candle. See the pullback? See the flat? There's a wick and a tail here. Now we did get a Heiken Ashi reversal right here, but I waited until no, actually I took it right there. This is where I took it as it came out of the. Yeah, this arrow is wrong. I took it right here as it came out of this dynamic compression zone. This is a dynamic compression zone right here that Compass system creates. It's actually a specific criteria for a compression zone. So when a stock breaks out of the compression zone, it's a bullish setup. So that's what we were looking for here, and we got a bullish setup. And this was a 30% profit in 5 days. We just wrote it up for 5 days, and you could have kept into it by the looks of it here because it kept on going. But we were getting a little bit of choppiness in our multi-time frame momentum right here. We're getting some yellow right here. I actually took this when it was back over here on blue, I think. And yeah, it was blue and blue, but you get this is choppy, but the current time frame momentum, which is based on the daily, was staying green, and the trend was pretty much green. So that was when we took. This was MDT. This was another nice one we had on a swing trade. Again, this is a daily chart here. And these are not Heiken Ashi reversals. These are Heiken Ashi candles. These are regular candles. This MDT, we made a 25% profit on a swing trade. This is where we get in right here. We rode it along. Notice that we got here as it went from yellow to blue. We get in when it went blue, and we rode it along. Wasn't doing much, but the institutions were in there. We knew they were in there, and finally they took it off. VKTX, another one, 30% profit in 3 days. Everything green. Compass system telling us the institutions are buying this. We go in and we take it here. It just kind of meanders, but we still made 30% on this using options. With the leverage and options, it helps a lot. McDonald's, this was a nice overnight trade. We get in here as the stock came out of a dynamic compression. Everything green, we just watched it move sideways, popped out of dynamic compression. We took it overnight here. We get out right here. Get in for 8:30, out for 11:30, overnight contract, 37% gain. And that's the Compass system telling us the institutions are in there trading, giving us confidence that we're trading with the institutions when that happens. I think of swim indicators shared in the trading service. Yeah, in the trading service, there's a couple things. If you purchase the Compass system, you get the exact same setup that I've got on the chart that you saw there. They'll share the indicators with you. Now, if you're in the trading room, I keep the Compass system up all day long. And if anybody has a question on a particular stock, we just pop it in on Take a Swim, and we can see the Compass systems for that. So we do share it with the service. You'd have to buy the Compass system to actually get the indicators themselves. All right, so we'll keep on going here. This was Amazon. This was a 32% gain. We took just a day prop, just an intraday on this one. It popped up here. We traded in the morning, get out in the afternoon, 32% profit. Now this was a short, JD short. See it's coming out of this dynamic compression zone right here. You notice that everything has gone. This went from green to yellow, bearish, bullish to bearish. and everything else was already bearish as red. We took the profit, we took this right here, and we jumped into it during the day. We took a 61% profit. I think we actually took it overnight and made 61% on it. Dollar Tree, same thing, a 25% profit. You notice it's really easy to see here that the institutions are selling the heck out of Dollar Tree. But you see how it's kind of sliding sideways. It's not really coming down. We're watching this dynamic compression, and then we get a nice move to the downside here, and we took advantage of that for 25% profit. D-Dog, Datadog, again, downside here. See how it's coming out of dynamic compression with a red candle here. So we just took that here as it broke down, took it overnight, and made 21% on that. Crowd, 20% profit here. So you can see that, and again here, you see the choppiness here. So we took this on this blue candle when it switched to blue, but we get out right at the top. It went right to yellow the next day, but still this is a bullish setup. You see, the current momentum is giving us green and blue the whole time. The multi-time frame is telling us the institutions are kind of in and out, but it's good enough for us to take a nice profit in that one. This came right after earnings, by the way. Amazon, this was a 32% gain in 45 minutes. Again, everything's yellow except for the multi-time frame trend. But the trend itself, look, it was yellow because it had been compressing for so long. But we took it here. Now the compass system creates these pink and blue arrows. Pink arrow is a pop out of the box or a pop signal is telling us it's coming out of compression. These are actually can be used as good entries as well. The little green line here is a 15 EMA. And if you come into the room or the alert service, you'll get I have training videos on all of the compass indicators, how to use them for trading, what all these things mean, and how to use them. Again, this is the 15 EMA. This tells us what the current time frame trend is right here. But anyway, we took this 32% in 45 minutes on this nice little pop out here. And ENPH, 20% in an hour. This was beautiful. This is a 5-minute chart. See the breakdown with the pop out of the box signal right here, coming off the 15. Took it right here, in it for an hour and out. Took a 20% gain in an hour on that. And this was Verizon. I keep this up here because this was really an interesting one. This particular stock, Verizon, doesn't move an awful lot. It moves pennies, and the in the money options are really pretty cheap. We actually got an in the money option for Verizon out like a week or 2 weeks for 45 cents. We're in the money because it doesn't move a lot. And we were in this thing for 1 hour, and we get in at 45 cents. So if you paid $45 a contract, if you bought 10 contracts, you paid $450. We closed it at an hour for 67 cents, for $670 for $450. So it just because the options are cheap, if you've got the setups correctly, you can really take advantage of that and leverage the heck out of these trades. SPY, this was a nice SPY super system. Basically, we had everything lined up. The selling is going on across the board. We're breaking down with a pop out of the box signal right off the 15 EMA. Perfect place to take it. We take it right here, and down it goes. And then you get out right here as soon as you get a green candle. You just take that move right there. And this is typically for intraday trading, what would be considered scalping, kind of. I don't do a lot of scalping, but these can be fairly quick. A lot of times these type of setups only last 3, 4, 5 candles, which is why I don't alert on them. Netflix, another nice one here, 20% profit off this breakdown. See the VWAP? This is a 5-minute chart. This is the volume weighted average price. This is what the institutions follow. Stock breaks below the VWAP with a pop out of the box signal. When everything is yellow or red, take it here, 20% profit right down to there on the calls on this, on the puts on that. Anytime I do these, I'm taking puts and calls. This was Tesla. This was a 30% profit to the downside. See pop out of the box symbol right here. Stock breaking down below the 15 line, the little red line. Everything is red and yellow. Institutions are selling Tesla. So we wrote it down and we get out. This is right at the end of the day. We get out right here, 30% profit. And this is when we took overnight. I do sometimes take these if the setup's correct. We had everything yellow and red. We had a pop out of the box signal right near the end of the day on Tesla. The market was bearish. We decided to take a short on this puts overnight, stay in it overnight, and you see the gap down. It fell from 120 to 112. We stayed in it here, and those puts exploded. I think we made $7 a contract on the options, which is really a lot. And again, this is the Tesla using the Heiken Ashi reversal that we just looked at. This I wanted to show you. This is QSR. I talked about how the daily chart and the 5-minute chart need to be aligned. That's really important. They need to be aligned. So this is QSR with the daily chart. This is a daily, right? So you see right here this this move up to the bullish side. You notice how everything here is green and blue. So I know the institutions are now buying QSR. So this is where I want to get in. Then I need to go to my 5-minute chart and say, okay, where am I going to enter this trade? So in this particular case, I was watching it compress right along this 15 EMA, all right? And notice it went from red to blue and then popped out with a pop out of the box and go. So this is where we get into the trade. And it again, we went from blue to yellow, so that's a little concerning, but it went right back to green and because it was moving sideways. But we knew pretty sure that the institutions were in there, and then sure enough, it took off. Now remember, we knew the daily chart was bullish, and we wanted a daily chart was bullish. We wanted the 5-minute chart to be bullish as well, and it turned bullish right there, which is where we took the trade. All right, and this is just some hype I put in there. In April, I finished. We had 19 wins in a row, followed by 10 wins in a row. That's 29. I think 32 wins in a row was the biggest win stretch we had, and the biggest losing streak we've had so far is 4 losses in a row. And again, there's strategies that we use, and I don't want to take up the rest of your day here, but that's the system. This is the offers that we've got. Again, these are really good deals. This is 50% off of the regular price. Then again, this is the options alert service, and if you take the alert service, you're going to get the Discord room, and you're going to get my live trading room for a month. So you'll have the alert service and the trading room as well. You get the Discord as well. You'll get the SMS text alerts, obviously, and you're going to have what they call a wise way to trade options. This is basically about 25 videos that I got, about 30 minutes each, that cover compass indicators, how to use the compass indicators to find the highest probability trade setups, the funnel system, a lot of information on how to find the highest probability trade setups. And there's also videos on time spreads, weekly ATMs, credit spreads, all of the strategies that we use in the room. There's detailed videos on each one. So that's the alert service. Again, really a good deal for a year. If you're going to make 30 or 40,000, I guess $798 for a year is pretty good. This is the trading room itself. Trading room itself is again 50% off. So again, you get 12 months of the live trading room. You get the alert service alerts as well if you're in the room, and you get the same thing as we get the videos that the alert service gets, and of course you give access to the Discord room. So that's $849 a year. That's save 50%. If you just want to try it for a month, $50. I don't recommend doing anything for a month. I think you really can't tell what kind of results you're going to get. That's kind of a short period of time, but I mean, if you want to try it for a month, it's fine. It's a pretty good deal. And this is the actual compass system. This is the software that goes on your Thinkorswim platform, and it's the software would be put on your Thinkorswim platform by Rightline. Sergio down there, one of the techs, would take over your machine and put it right on there, so it would look exactly the same as mine, so you don't have any technical problems to try to deal with there. And again, this is $1249 for a year, which is usually about $2,500, and you can do it for a quarter if you want to try. It. Again, this is a really nice piece of software. I would be lost without it. It's one of the things I use, obviously, to find institutional trading. And the sale ends Sunday on all these things. And if you have any questions, again, put your name or number in the name and number in the chat box or in the question box, or your Skype username. Rory will give you a call. And that's the services. And I hope that the information I gave you on Heiken Ashi helped a little bit. Let's see. Yeah, this will be recorded and shared later. Sure thing. Jesse, am I using Heiken Ashi candles and entries? Yeah, I do pretty much, Jesse. The way that I use Heiken Ashi, the two main ways, is I'm going to use Heiken Ashi candles to identify when I want to get into a trade, because I'm looking for a stock. If I'm going long, I'm looking for a stock to come down to a support level, and I want to get in when it reverses off that support level and starts to head back up into the original trend, but I want to make sure that that trend is confirmed. So I use Heiken Ashi candles to identify that. And I'd also use Heiken Ashi candles to make sure that I stay in the trend. Because if it's like I keep getting flat bottom candles, I'm not going to get out of the trade. As long as the candle's a flat bottom, even if you get like a pullback on a regular candle, if I still get a flat bottom, I'm going to stay in the trade. Now, once I decided I want to exit the trade, in other words, I'm at my profit target, I want to get out, then what I'm going to do is I'm going to go and look at the regular candles so I can look for the reversal to happen on the regular candles. It'll be identified more quickly because I can see it on one full 5-minute candle instead of two. But for entries, absolutely the Heiken Ashi is what I use. Please show again where you see institutional activity. All right, I will do that. What is the P&L for the trading system? What's the P&L for the trading system? The last 5 years. Well, I've been trading the Compass system for I'm in my 3rd year. I mean, I started when I started the room. So the P&L, it's both years is about the same. So that if you take a look, if you're putting 2,000 into a trade for 2022 and 2023, keeping in mind that 2022 was the beginning of the bear market, and we're in a bear market for 16 months. But the percentage rate year to year has been just about exactly the same, about 86.5% both years, and profits were roughly around 60,000 a year on both of them. If you invested 2,000. I can't tell you 5 years because I know what my own record is for 5 years. I've been able to maintain a 85% win rate for 5 years, but using the Compass system, I have it for this is going into my 3rd year. And please show again where you see the institutional activity. All right, let's look at the right here. This is we look at any chart. The institutional activity is made up of momentum, his current time frame momentum, multi-time frame momentum right here. Right, so these two things these are the two key indicators. This is if it's green or blue, the multi-time frame. In this case, you're talking a 5-minute, a 15-minute, and a 45-minute. All of those are moving up in the same direction. Momentum is very important. Momentum it tells you a lot, by the way. And this was the current time frame momentum. So this is the momentum on the 5-minute. This is the trend. This is the longer term trend, and this is the current term trend, 5-minute trend. This is a multi-time frame trend across 3 different time frames. This is what's called it's money flow, or what's called bias. And this is the last one to change. I don't use this very much. These are the 2 that I use the most because I want to know momentum is moving up across all different time frames. Because the way momentum is indicated, if you understand how momentum works, it's not a stock moving up fast. It's when you go from candle to candle, it's the high of that particular, or the close of that particular candle is getting closer and closer to the high of the candle as you go from one candle to the next. So if that makes sense to you, if the previous candle was with 30% away from the top, the next candle is 25% away from the top, and the current candle's 10% away from the top, you've got increased momentum even if the price isn't reflecting that, because the price could be fairly flat, but the momentum is increasing. And that's what's telling you that the institutions are pouring money into that. Thomas, does that help you as far as the institutional activity is concerned? Because this is the Compass system that tells us about institutional activity. You see bearish, you can see how much selling there is here in Tesla. And again, this bearish here, yellow and red, bearish. See all the selling in Tesla. Netflix selling, the institutions are selling this thing off. There isn't any question about that. The institution is doing this. When you get mixed candles, mixed colors like this, it's not as confirming that the institutions are in there. This is much more likely that the institutions are in here selling. If it goes above resistance, will it continue? If it goes above resistance, will it continue? Well, the thing with if you're in a trade and it goes above resistance, if you're using, I don't know if you mean, does it break through when you're in the trade, or does it go, once it goes through resistance, do you go ahead and enter the trade? If you're talking about entering a trade on a break of resistance, And that's how a lot of people trade. They'll trade a break of resistance. If you use a Heiken Ashi candle setup, then yeah, the continuation. Okay, so if you're gonna continue, once it breaks through the resistance, just keep your Heiken Ashi candles up there and see if the Heiken Ashi candles stay above resistance. If it breaks above resistance and then you start getting wicks and tails, and then, for example, a flat top red candle that's a bearish reversal, get out of the trade, because it's likely going to break down, and that's likely to be a failed continuation. But if it continues with Heiken Ashi candles with flat bottoms that are still green and moving up, then you stay in the trade. But that's where you got to be very cautious. Once the stock breaks through a resistance level, you have to be very cautious, because a lot of resistances fail. And that's one of the big advantages of using Heiken Ashi, is you're not jumping in on the first 5-minute candle that breaks resistance and riding it up, because you're not waiting for confirmation if you do that. If you're not waiting for confirmation, then you're going to get a lot of failed breakouts. It's one of the things I listed on the Heiken Ashi reversal, the Heiken Ashi candles benefits, is you're getting a confirmation of a reversal when it's bouncing, or you're going to get a confirmation of a breakthrough as well, Terry. Yeah, continuing from previous. Yeah, that's you break through resistance. Obviously, if you're in a trade, when it gets to resistance, you need to be aware of that, and you want to be looking to take profits as soon as it starts to fall back. If it moves through and you get Heiken Ashi candles telling you they're still in a trend, then just stay with it until the trend starts to fade. All right, I think that's all the questions I've got. I appreciate that. Again, it was we were in here about an hour and 15, hour and 20 minutes, so didn't mean to take up everybody's time, but I hope that this helped you. Again, you've got some nice information here. You've got some great opportunities to get the alert service, as well as the trading room, as well as the Compass straight trading system to let you know when institutions are in there. In the chat box, there should be some there's drop downs in there. There's links for all 3 of those particular offers if you're interested in that. Rodney, thanks very much. Jim, thank you very much. Appreciate it. You stopped painting to watch, Terry. Appreciate that. I hope this was helpful to you. I really think that Heiken Ashi candles, if you are able to use them, I think it's going to help your trading. Again, I use them all the time in the trading room, and I hope to see a bunch of folks in the trading room or the alert service here pretty soon. And again, Rory will take care of any questions that you have. When are my win rate for January right now? So far, Daniel, I haven't had any losing trades in January. I think I posted it back here, way back at the beginning. Yeah, this was January so far. Now, I do have a couple of trades that are underwater right now, and a couple of one that's break even. I'm in Boston Scientific, which is about break even right now, and a couple of other ones as well. Gilead, which is going to be a loser because we had news on Gilead. They had a bad FDA report. Not much you can do about that. Also in GE, but GE is pretty close to break even. And I'm in Fortinet right now, which I think is actually about break even as well. So I don't know where we're going to go. I have Goldman Sachs on as well. So we could have a couple of losses in the next week or so, or we could turn a couple of them around. But we'll be adding more trades as the week begins. So that's our January. That's our January one here. That's a pretty nice win rate right now. But again, we have other trades on right now. So. Gil's, this is a good question. How much does one need an account to follow all your trades, giving day trade restrictions? Well, first of all, a lot of the trades I take are not intraday trades. In other words, they're not going to impact you because they're going to be overnights at least, if not a few days. And if that's the case, then that doesn't impact your pattern day trader rules. But typically the most trades I usually have on at one time is 5 or 6. Sometimes it drops down to 2, 3, but usually around 5 or 6. I usually don't have more than that on unless I've got a bunch of put credit spreads. Sometimes I put credit spreads, but those are minimal margin requirements, and they're also, you don't have to watch them all the time. But so yeah, I would say, listen, if you're going to day trade, obviously you need 25,000 or more in your account to intraday trade, unless you have a cash account. You can do a cash account with less than that. But if you're going to day trade, basically with margin, you need to trade at least 25, which means you need to have about 30,000 in there so it doesn't fall below that. But I mean, if you're just going to trade these and take specific trades and take the ones that, like the time spreads that I have, and put credit spreads and weekly ATMs, things that are gonna, they're gonna be overnight. And even any of the trades I take that I get out of during the same day, because of the fact that the day trade and the day chart and the 5-minute chart are both aligned, you can stay in those overnight if you don't have the ability to stay in because of a PDT rules, pattern day trader. If you can't stay in, you can still stay in the trade overnight and then take it off the next day, because they're all constructed as swing trades when I take them. It's just a matter of whether I made enough profit during the day. Like if I get into a trade and I'm up 30%, I'm likely to take some of it off at least before the end of the day. I may keep some of it, or I may take the whole thing off. But if you're in it and you can't sell it because you don't meet the pattern day trader rules, then in that case you just hold it overnight. Dan, you're welcome. Are alerts given for exits? Yeah, absolutely. Alerts are given for exits. Most of the time, sometimes I'll put the sell price when I put the original trade out. Like if we're doing like a what's called a time spread, which is over earnings, we usually put those on just before the close. If the stock has earnings that night or tomorrow morning, that trade will come out with a sell order. It'll have, you get filled at 45 cents. Put a sell order in there for 55 or 60 cents, whatever it is. It'll be on there. And if it helps us the next morning, I may have to make an adjustment. But the normal trades that I put out, normal puts and calls and things like that, I'm generally going to send out a separate alert with the sell order once I see what the price action looks like during the day, or maybe after a couple of days. Maybe we go underwater and I still like the technical setup. Then I'll wait, and then I'll finally put a sell order in on it, on the price. But you'll always get a sell order. Roman, you want a copy? Anybody who's registered will get that. Do you have to enter the trade quickly when the alert goes off? It depends on what the stock price movement is concerned. What I recommend is when you get the alert, and you should, I mean, I get the alerts too, so I can judge how long they take. It usually takes about a minute, maybe 30 seconds or to a minute. What you want to do is, I'm going to have a price in there that you should pay. Say it says $1 to $1.05. So if it's, let's say when you get the alert, the stock shot up and it's $1.20. What you want to do is just go ahead and put an order in for $1.05. And if when it comes back and pulls back, which they usually do, then you'll get filled at $1.05. If it runs away from you, then you don't want to be chasing it. So you might miss something like that. But generally speaking, I can't predict obviously how fast a stock is going to move or how fast the options are going to move. But generally, I put it out there and you get it quickly, and that's how it's going to work. So you want to make it. If you wanted to go and pay $1.10, if it's $1.05, that's okay. But don't pay $1.25 or $1.30 or anything like that. Just put a $1.05 order in there, wait for it to come back, and fill the order on the pullback, because there'll be pullbacks. All right, any other questions? Get a lot of questions. I appreciate all the questions. These are good questions, and I try to be as transparent as I can be about the methodology we use. This is finding the very highest probability trade setups you can find. But again, I'm leveraging institutional buying, knowing when the institutions are in there, and then following other criteria, the criteria I get for the highest probability trade setups to only find the best of the best. That's what we're looking for. But yeah, we want institutions to be in there, but we also want the stock to be a bullish setup on the 5-minute, a bullish setup on the daily, and we don't want it to be close to resistance, etc. A lot of lot of methodology goes into these particular trades when we find them. So, and again, in the room, if you're in the room, we go over this all the time during the day. We go over what we follow for rules, how we get in these, how we get out of these. You know, if you look at this is posted every morning in the room. This is what shows our trades on it. It's got the SPY support and resistance, and then you go down here and we go into what we use for the main criteria that we use for finding high probability trade setups. We go over this every single day. People post charts, stocks that I put the charts up, and then we go over those charts with technicals on them, for both in the 5-minute and for the daily, to identify whether it's a good trade or not a good trade, or at least in my opinion. Mike, thanks very much. Rory will see that. He'll give you a call. I appreciate that. Yeah, a lot of people who work, we have an awful lot of people in the alert service. I mean, it's really quite a few. But you know, the stocks we take, we have quite a bit of liquidity in the option, so that's not a problem. Okay, a couple more questions here. Mike, you're a day trader, and I used to do option trading. My question is off the topic. On January 20th, there was a big spike in the S&P market in an instant. Went from low of 4,900 to 167, recovered. Do you notice that? And if so, what do you make of that? There's a big spike. We never see anything like that. Yeah, I saw the spike. Listen, most of those things are what's called bad prints. They're not real trading. People, I mean, I've seen this discussion before. Oh, it's dark pools. Oh, no, it's not. It's a bad print. You get bad prints from time to time, and sometimes you'll see them on a. You know, I have Thinkorswim up here, and I have my TC2000 up here, and I've got other charting programs up here, so I can see when they occurs on one chart or another chart. If it occurs on them all, it's usually a bad print that came across from one of the ECNs. Mike, you'd love to be in my room. Easy enough. You can just, you know, listen, if you join the room, you get the alert service anyway, but you're also going to get, I mean, I do call out other trades in the room that we can't send out an alert service because it's not practical because of the time involved in it, or the structure or whatever. But so there's more trades that are called out in the room than go out on the alert service. But all the trades that go out in the alert service are called out in the room. You know, and I'm taking all these, any trade that you see posted or an alert, I'm trading it exactly the same way you are. Well, maybe not exactly the same, but I'm buying puts or calls or whatever it happens to be a spread. I'm trading every single one of those. I mean, I'm using my own money to trade all of these things. So I know what the P&Ls are like. When a lot of times we'll have a couple of stocks that go against us, and people in the room will be saying, I'm down money on this. And, you know, I tell them, I know, so am I. I mean, you know, I'm trading the exact same things. Terry, you joined years ago, but never used. Yeah, that was probably before my time. Look for your name, Terry, staying off the look. And Rory can look that up for you. But, you know, like I said, this is my 3rd year in this. And this methodology I use, which is this high probability trade setup using institutional money, and focusing on day charts and 5-minute charts, and using things like Heiken Ashi candles. I mean, I don't know that anybody else is doing that. They may be, but I find that this is the best way to trade for consistent profits. That's what it's all about. Mike, you're welcome. Appreciate all the questions. Appreciate all the questions. All right. Well, I guess I will call it a day. Again, there's links in the chat box to the 3 different deals that we've got here. The sales on the alert service, $7.98 is really cheap for a year of that alert service. And again, $8.49 for the room, and that includes the alert service. So that's pretty nice. You know, even if you can only be in the room 2 days a week or something, or 3 days a week, I think it's really worthwhile to get the room because you get the alert service anyway. And I think that would be, it would be useful to you because even if you're only in a couple of days, you're going to get a lot of education inside the room. And there's the compass trading system for people who are serious about wanting to have a piece of software that can identify institutional buying or selling and use it for their own benefits as well. I mean, a lot of people in our room have the compass system as well. I keep it up as well, but they have their own charts running so they can switch back and forth from stock to stock to take a look at it themselves. All right, everybody, listen, have a great weekend. I certainly appreciate everybody coming in. We had a lot of people in here today. I hope the information on Heiken Ashi candles you find useful. I mean, you can, when you get a copy of the webinar here, you can go back over it again. You can look at what I wrote about it. I didn't want to drag, I mean, I could spend 2 hours talking about Heiken Ashi candles, but I wanted to give you the basic components of how to use them in trading. So listen, have a great afternoon, everybody. I appreciate it. Mike, thank you very much. Appreciate that. And see everybody in the room, or a lot of people hopefully in the room and on the alert service come next week as we move into, by the way, next week we have tons of earnings. All the big techs start reporting next week. Apple, Microsoft, Meta, Google, Amazon, all reporting next week. And the FOMC, the Feds, will have a rate decision on Wednesday afternoon at 2 o'clock. Likely to be no change, but all of those things can be huge, very big catalysts for the market. So it's going to be pretty volatile coming into next week. So again, have a great weekend, everybody. We'll see. Hopefully, we'll see a group of folks in the room on Monday. I look forward to it. Rory, what actually takes place in the room? You know what? I call out trades. I discuss charts. I keep calling out trades that I think are high probability trades, and I answer questions all day long, as well as run scans and look for trades to take. It's pretty tiring, but I love doing it. Mike, you'll be back. Great, glad to hear that, and I appreciate that. So everybody have a great weekend and enjoy yourself, and hopefully see everybody here on a bunch of people here on Monday morning as we open another week of trading. Have a good one.